Hello CMS students. So welcome to my live channel. In this channel, especially those who have appeared in the upcoming examinations, this channel will be helpful for only CMS students with the true and fair information. So if you like it my channel, please subscribe. So in this live channel we discuss about cost accounting, paper 8 cost accounting bit questions. So stay live. So in the process of conversion, so before starting the topic we need to let's practice some MCQs here. In the process of conversion cost, the cost of director in the process of conversion cost, here the first one is choose the correct answers from the given alternatives. So in the process of conversion cost, the cost of conversion cost means direct labor and direct expenses and indirect material and indirect labor, indirect expenses. This is the B is the answer. So B is the first one is. So first one is B. So economic order quantity level, the following is true. C is the answer. The ordering cost is equal to the carrying cost. The ordering cost is equal to the carrying cost. Next, third one is when a direct worker is paid on monthly fixed salary basis, the following is true. The salary is, there is no ideal time of cost. So there is no ideal time of cost. The following is an example of direct expenses as per the cost accounting standards 10. So the cost accounting standards deals with the direct expenses. So here it is traveling expenses to the site is the B is the answer. So fourth one is B is the answer. The following is not treated as a manufacturing overhead is night shift allowance is not treated as a manufacturing overhead because it is night shift allowance is only paid to the factory worker due to the general work purposes allowances. So it is not a manufacturing overhead. So D is the answer. When you attempt the reconciliation of profits as per the financial records, financial accounts and cost accounts, is the following is done add under absorption of financial accounts. So A is the answer. Batch costing is applicable effectively in the following situation is drug manufacturing. Batch costing is always pharma industries, that is pharma industries taken in the drug to manufacturing the drug. In the context of a contract account, the work completed is not as certified will be shown on the D at the cost of work in progress account. In a certain process, so we are into the number 9. In a certain process needed a standard labor of 24 skilled labor hours and 30 skilled labor hours is at rupees 60 and 40. So we calculated here so total skilled labor hours and 30 skilled unskilled labor is 60 and 40, 24. So 24 into 60 we got 2400. This is the skilled labor. So 24 into 60. So we got 1440. No. Total labor hours, total labor hours equals to, total labor hours is 60 plus respectively 24, that is 24 skilled labors, total 60 into 40, that is 60 into added, so 100, that is equals to 2400. Same like 30 into 100, we got 3000s. So 3000s minus 2400, we got total standard labor hour, we got total 600. The total standard hours, that is 600. 3000 minus 2400 is 600. This is the standard hours of standard labor hours. So we got the standard labor hours rate is 600. So actually 220 of 25 or 20 or 25 labor hours were used at the age at the 30th. So 50 into 25, same again, 20 into 100. We got skilled, both skilled and we unskilled we added. So we got 2000s. So again 25 into 100, that is 2500, that is equal to 100, difference 2500 minus 2000, that is 100. So we already got 600, we got to standard labor hours minus standard hours labor rate is 500, that is equals to 100, that equals to minus labor hours used labor hours is 100, that is 100 minus 100, that is equal to 0. So C is the answer. C is the answer. If an organization has all the resources it needs to for production, the principal budget is factor is mostly like to sales budget. B is the answer. So in the organization, as it all resources is needs for production, why you are making a production, so you need to have principal budget factor is mostly like to for sales demand. For the sake of sales demand, the organization is used all the resources for need of the production. So sales demand, B is the right answer. So cost of unit of hospitality is the patient. So hospital is D is the answer. So which of the following is considered as a normal loss of material? So none of these. So filtrate due to shrinkage of the nature, and so loss due to the careless by handling of material. So normal loss of which of the following is not considered as a normal loss? So D is the right answer. None of this D. So ideal time is, so what is the ideal time? So ideal time is when the worker is time spent by workers of their work. So time spent by the workers of their work is ideal time. Warehouse is an example of, so 14th one we have moved to the warehouse is an expense, is an example of selling and distribution or production overhead. So warehouse is for distribution. So we already finished the goods to for the distribution. So warehouse is an example of distribution. So distribution, we got the distribution. Warehouse is an example of distribution overheads. C is the right answer. Which of the following is not included in preparation of cost? So cost sheet is not prepared under the our interest paid is not included in the preparation of cost sheet. So operating cost is hospital, cinemas and transport undertaking is D is the right, all the above. So here it is, if 17, if the sales are 90,000, the variable cost to sales 70%, the contribution is, so total cost is, here total cost 100, we assume total cost 100 minus 75% of cost to the sales, so total cost equals to 100 minus 75% of sales, that is equal 70% cost to the sales. Total sales is 100, we assume it 70% will be variable cost, so we got 25% is the variable cost. So variable cost we find out here total, so 100, so 25,000, sorry, so we calculate here, so we got the variable cost on 25%, so cost to the sales variable 75%, we got contribution is 25%, so 90,000 is the sales into 25%, so we got how much, 90,000 into 25%, so 2,500, so B is the right answer, 22,500. So profit ratio generally increase for the decreasing of the, will be increase, decreasing the selling price per unit, so decreasing the selling price of the units. So PV ratio, profit and volume ratio, will increase if there is a decrease in the selling price per unit. So difference between cost, so difference between standard cost minus actual cost, that is equals to variance. So remember it, standard cost minus actual cost, the difference is called C, variance. C is the right answer. C is the variance. Sales budget is a functional budget. Depreciation is an example of fixed cost. Continuous stock is a taking part of perpetual inventory. So cost of ideal time, the cost of ideal time arising due to the non-availability, cost of ideal time arising due to the non-availability of raw material is charging to the cost and profit and loss account. So cost ideal time is charging to the cost and profit and loss account. So if you understand clearly of the topic, we easily crack this multiple choice questions, fill in the blanks and everything. So read the institute material as much you can. So what is meant by overtime? So overtime is generally calculated actual hours more than normal hours. So actual hours is more than normal hours. So actual hours is being more than normal time. So normal time has been employed worked in the factory or wherever maybe. So overtime is actual hours being more than normal time. So if A is actual hours being more than normal time is overtime. So the allotment of whole items of cost centers or cost unit is cost allocation. So A is the right answer. In a reconciliation statements, expenses shown on the finance accounts are added to the financial expense reconciliation statement, added to the financial profit, because expenses always incurred in the financial books, so financial accounts. Job costing is used for all the above, printing bass, all the above. So job costing used for all the job costing is used in furniture making as, repairing shops as, so printing as. So D is the right answer. So next 28th, In the process of 8,000 units are introduced during a period, 5% of input is a normal loss. The equivalent production is for the period is. So we need to calculate here equivalent production. So equivalent production formula is actual completed hours, actual so formula actual completed hours plus incomplete in work in progress, incompleted work in progress. So actual completed works. So actual completed works is, so completed is 6,600 is completed. So 6,600 completed plus 60% of work in progress in 1,000 units. So closing work in progress is 60%. 60% of 1,000 is 600. So total 7,200. So we got D is the right answer, 7,200. So here it is, if the sales is 1,50,000, variable cost 50,000. So compute the PV ratio. So PV ratio formula, what is the mean by PV ratio? PV ratio equals to PV ratio is equals to equals to change in contribution divided by change in sales. So this is the formula, change in contribution divided by change in sales. So we got to apply here. So change in contribution, so we need to calculate contribution here. So sales minus variable cost. So what is the variable cost? 50,000. So 50,000, that is we got 1 lakh. So 1 lakh is the contribution. So we apply the formula, change in 1 lakh. So 1 lakh divided by 1 lakh sales, change in sales. So change in sales, what is my total sales? Equal to 1,50,000. That is 66.66%. So 66.6%. So 1 lakh divided by 1,50,000 into 100. 66.6%. So A is the right answer. Standard cost of a material given quantity of a output of rupees 15,000, while the actual cost of material is 6,200. What is the, we calculate is the material cost variance. What is the cost of material variance? So what is the cost of material? We need to calculate here the material cost of variance. So we need to apply formula here, and once again the material cost variance equals to, so material cost variance equals to actual. So we need to calculate actual cost of material. So actual cost of material minus standard cost of material. So material cost variance equal to standard cost of material. So standard cost of material, standard cost. So actual cost of material minus standard cost of material. So applied actual cost here is 16,200 minus 15,000. So we got how much? 1,200. So 1,200. This is the actual material cost of variance. So the material cost of variance. So variance is difference. So we need to subtract them. Remember, variance is the difference. So we need to subtract them. Standard cost minus of material minus actual cost of materials. So actual cost minus actual cost. So standard cost minus standard cost minus actual cost equals to material cost. We got minus, so we need to calculate that, not that way. So we need to calculate actual cost. So actual cost, so material cost variance equals to actual cost minus standard cost. standard cost, that is equal to, here we apply here actual cost is 16,200. So 16,200 minus 15,000, we got 1,200. So A is the right answer. So hope you will understand the 30th. For choose the correct answers, we move into the 31st. Selling and distribution overhead are observed on the basis of, so whenever we selling and distribution, we calculated the selling and distribution. So selling and distribution, when the sales of units per percentage, how the selling percentage will be sales, will be sales and distribution. So selling percentage of selling and prices for each unit. So what the entry will be passed under the integrated system for the purchase of stores or the credit store. So when the purchase of stores purchased on credit, the entry will be purchase account data to creditors account. So purchase account data, just like when you apply in the financial accounting, that's it. Some students are taken that way. So that is the right answer. When the stores purchase, so stores purchase, we need to calculate stores ledger. Stores remains whenever the ledger accounts we maintain where purchases are called stores ledger account data to creditors account. So stores purchased here. So stores ledger. So here it is integrated systems means purchases. We understand the integrated system. We easily understand this type of. So understand the concept is the key to success here in this profession. So I already told him, repeating again. So hope you understand. So purchase of stores on credit is, so whenever the purchase of stores that is on credit is, we need to remember is stores ledger control account, stores ledger control account that are to creditors account. So C is the right answer. So C is the right answer. So once again, what is the integrated system? Integrated system is opposite side of the normal financial accounts in the cost accounting system. So that is simple brief. So next same question, equivalent production. So equivalent production we already know. Total completed units is 6,060. Formula applied, just 60% of 100, that is equal to 60, that is minus. So we need to add it. So 60. So 720 is the right answer. So 660 minus 60% of 1000 units. So 720. So equivalent production, equivalent means add, equal, some equal. So we need to calculate here. $6,200. So sorry, 6,000. So equivalent production whenever we calling completed unit 6,060 plus 60, that is equals to closing work in progress incomplete. So incomplete is 60% of 1000 units, so 60. So we need it calculate 60 plus 60 equal to 720. 660 plus 60, that is equal to 720. Dash deals with the principles of and methods and determine the production overheads is, so overheads always 3. So cost accounting standard 3, cash 3. So next, if there is a loss in the financial accounts 10,600, donations not shown in the cost accounting 6,000, what would be the profit or loss for the cost accounting? So cost accounting, what is the profit? So called in financial accounting, donations are not shown in the cost accounting. So what would be profit and the cost accounting? So cost accounting, or what is the profit, would be profit or loss. So 10,000 donations, 10,600 minus, so not shown, that's why you calculate deducted here. So 6,000, that is 10,000 minus 600 is 4,600 is the answer. So C is the right answer. C is the right answer. A hotel room having a hotel having 1,100 rooms, of which 80% is normally completed. So in the summer, 25% in winter. Period of summer and winter be taken as 6 months. For each and normal days in next month will be assumed to be 30, assume it to be 30. So total occupied rooms day will be, so we need to calculate here. So our total 100, out of which 80 is normally come occupied in summer and 25% in winter. So period of 6 months into 6 months, so each month we assumed equal to 30. So we got it 100 into 80% into 60 into 30 because 1000. So 1,44,000. So 1,44,000. This is the summer. So we calculate here 1,440 4,000. This is the summer. We need to calculate here summer. So what is the same again? 100 into 25% into 6 months. Each month is 30. So we calculate here same 100 into 25 into 6 into 30. So this calculation is wrong. Okay. Calculation is written. So here it is. Okay, sorry for the interpret. Next, here it is. Calculate, we understand easily. Total rooms is 100 into 80%. So 80% into 6 into 30. 6 into 30. That is equal to 1,044.00. So 1,400. So simple again, only calculator 100 into 100 into 80%. So into 6 into 30, 6 months, and then we calculate here. So we got 1,44,000. So 1,44,000. So total occupied room days is equal 100 against 100 into is 20, this time not 25 winter, this is winter 60.5% plus 6 into 30, that is equal to 100 into 25% into 6 into 30, that is equal to 4,500. So 4,500 minus, so no, add it total, what is the total occupied room? So total occupied room is plus, so I need to add it here. 1,44,000 plus 4,500. So 100, 10 added. So 100 into 80% into 6 into 30. So 1,400 plus 4,500. So we calculate here. So finally we got 1,800, 900, 900, 18,900 is the rooms, total rooms occupied in that hotel of that seasons. So that seasons, each season has, so normally occupied in 25% in winter and 80% in summer. So we need to total have rooms will be total occupied rooms is room days is will be 18,900 is the rooms, total rooms will be occupied at that hotel. So CB is the answer. So next, so here it is a firm 37, a firm has expenses rupees 90,000, the sales of 33 lakhs and profit of rupees 60,000. The profit of ratio, profit profit and volume ratio of the firm is, so 90,000 profit and volume ratio equals to, so PV ratio, what is the formula? Change in PV ratio equal to change in contribution divided by change in sales into 100 into 100. So we need to calculate here sales. We got fixed expenses here. Now get 3 lakh sales, that is equal to profit equal to 3 lakh 90,000 plus 60,000. That is the contribution. For profit is equal to fixed expenses. So 90,000 plus 60,000, 1,50,000 divided by, so 1 lakh, so calculate here. So 90,000 because contribution equal to fixed cost, fixed expenses, fixed cost plus profit, fixed cost plus profit equal to contribution. So contribution equals to fixed cost plus profit, that is equals to 1,50,000. So 1,50,000. We got contribution. So contribution we got 1,50,000. So 1,50,000 divided by 33 lakhs, that is equal to 50%. So 1,50,000 divided by 3 lakhs, we got 50%. So 50% is the profit and value ratio, profit and volume ratio of the firm is at 50%. So D is the right answer. So marginal costing technique is the follows on the basis of classification. Is on the marginal costing is based on the behavior. We see, and if you study the study note number 1, we understand the following the classification of cost. We easily understand what is the class. We understand the classification this bit. So whatever may be classification of cost, we understand the classification of cost. That is marginal cost is technique is followed on the basis of behavior, where the cost is taken into the behavior side. So which of the following is not to the potential benefits of the budget? Which of the following is not potential benefits using a budget? Using a budget is, so more accurate, D is our answer. More accurate external financial statement, more accurate financial statements. So joint cost, oil industry. Joint cost is suitable to oil industry. So oil industry. Which of the following is considered as an accounting record? Accounting record is whenever accounting record maintained by stores keeper, stores ledger. So cost of the cost of is maintained by stores. Bin card is maintained by. So bill of material is not it's the only issuing of the issue of the materials. Time and motion is concerned by time and motion is conducted by the timekeeping department. So timekeeping department. Time is the references. Time spent by workers on their job. Time is worked under the job. Time spent by workers in the factory. Times refers to times spent by workers in their factory. That is the answer. So time and motion study is conducted by motion study is conducted by the engineering. Payroll is the wages, personal Personal development department is HR. Timekeeping department is category is refers to workers in the factory. Time spent by the workers in the factory. So next 44, royalty paid 89,000. So direct expenses of product recharge development charges is product is 22,000. So calculate added 89,000 plus 22,000. So 22,000 we calculate on total how much? 1,11,000. So 1,11,000. B is the answer. So B is the answer. So 11 lakhs 1,11,000. So 1,11,000. So 1,11,000 is the answer. So we got B 1 lakh. So 99,000 because calculate the software expense charges is equal to direct expenses. Royalty also direct expenses. So both are we added equal to 11 lakhs. 11 lakhs 11,000. So 11 lakhs 11,000 is our direct expense does not mean the rest of material can be dash part of the overall. Treated can be treated by the part of the direct expenses does not meet the test of the material can be treated part of the overhead. So A is the answer. When an amount of under over absorption is significant, it should be disposed by the use of supplementary rates.